Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the October 2025 meeting. At its latest meeting, the FOMC chose to lower the target Fed funds range 25 basis points to a level of 3.75 to 4%. And they also lowered the rate on reserve balances to a level of 3.9%. The decision was widely expected by the markets. There were two dissents in the committee, however. One from Fed Governor Stephen Miron, who favored a 50 basis point reduction, and another from Federal Reserve Bank of Kansas City President Jeffrey Schmidt, who favored no reduction at this meeting. The post-meeting statement had a few changes. Probably the most significant change, other than the rate move, was the notification that the committee is concluding the reduction of its balance sheet holdings on December 1st. We'll see what additional information Chair Powell gave us at his press conference after the break.
A secure future starts today with Vizo Financial and our partners at Fortra. Together, we offer vulnerability scanning and penetration testing to help safeguard your credit union's network and systems. With vulnerability scanning, we'll help you look for and identify holes and gaps in your network. With each scan, you'll get to know your risks better and remediate existing vulnerabilities. Penetration testing takes your understanding of vulnerabilities to the next level through an ethical simulated attack. During this testing, we'll show how attackers can exploit any weaknesses to gain access to your information. Know your vulnerabilities, mitigate your risks. Be proactive with vulnerability scanning and penetration testing services. Build a secure future with Fortra and Vizo Financial today.
Welcome back. Chair Powell gave his prepared remarks to start the press conference. He said that based on the available private and public sector data, the outlook for employment and inflation has not changed much since the September meeting. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. Higher tariffs are pushing up prices on some goods, resulting in higher overall inflation, though the base case remains that the effects on inflation will be short-lived. In the near term, the balance of risks remain in tension. That is, risks to inflation are tilted to the upside, and risks to employment are to the downside. A difficult situation that provides no risk-free policy path and calls for a balanced approach in promoting both sides of the dual mandate. Chair Powell also explained the reason balance sheet runoff is ending on December 1st. He said the committee's long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level judged to be consistent with ample reserves. And signs of that condition have emerged given rates and activity in the repo and Fed funds markets. In the question and answer session, I think the biggest takeaway has to do with the outlook for the December meeting. Chair Powell greatly emphasized that a rate cut was not a foregone conclusion in December. He said that there are strong differing opinions on the committee about what should be done in December, which is not unusual given the situation and the fact that there are differing forecasts and differing risk tolerances amongst the committee members. For some, that means it's time to step back and wait to see some of the evolving data, while others want to keep moving forward with additional cuts. Another factor will be the availability of data given the government shutdown. If the shutdown continues to drag on and there is little additional data by the time the December meeting takes place, it may be prudent to slow down the pace of policy adjustments until more data is available. Well, the Fed delivered another rate cut, but was pretty clear that the market should not necessarily plan on December for another. When the FOMC chair emphasizes that a cut in December is far from a foregone conclusion, indicates rates are getting down close to the range that most feel is neutral, and says the committee does not see weakness in a job market accelerating, that seems to say that markets have gotten ahead of themselves on rate cuts. That's the FOMC update for October. Thanks for watching, and be well.